If you thought your taxes were about to get worse in 2026, you're not alone. Millions of Americans were bracing for the Trump tax cuts to expire. But Congress just passed something huge. It's called the One Big Beautiful Bill. Whether you're a family of five, a solo entrepreneur, or a senior on Social Security, this bill was built to help you keep more of your money. In this series, we'll break it all down. But first, let's talk about what this bill is and why it matters for your wallet. The One Big Beautiful Bill, or OBBB, is Congress's answer to the 2025 tax cliff. It makes the best parts of the 2017 Trump tax cuts permanent and adds new deductions for working families, seniors, business owners, and even tipped employees. Think of it like a major tax tune-up. It locks in the lower tax brackets, keeps the standard deduction high, extends popular credits like the child tax credit and QBI deduction, and even creates new options like Trump accounts and tax-free overtime. It's over 900 pages of reforms, but the goal is simple. Keep middle-class taxes low and American small businesses strong. Let's rewind. Back in 2017, the Tax Cuts and Jobs Act gave us lower tax rates, higher standard deductions, a 20% QBI deduction for business owners, and double the child tax credit. But here's the catch. Those cuts were set to expire in 2025. That meant your taxes would go up starting January 1st, 2026, unless Congress did something. Well, with One Big Beautiful Bill, they did. Now the lower tax brackets are permanent. The standard deduction stays high, $15,750 for singles, $31,500 for married couples in 2025. The QBI deduction locked in, child tax credit extended and enhanced. And the tax code? It's now more predictable and easier to plan around. That's a win. So who benefits the most from the One Big Beautiful Bill? Middle-class families who don't want to lose their child tax credit or get bumped into a higher bracket. Small business owners who rely on the QBI deduction and bonus depreciation. Seniors who now get a brand new $6,000 deduction. Wage earners and service jobs. There's a new deduction for tips and overtime. Renters and homeowners alike, thanks to changes in SALT caps and mortgage interest deductions. If you earn under $500,000 a year and pay taxes, there's something in this bill for you. Let's talk dollars and cents. Say you're a married couple with 2 kids, earning $110,000 in household income. Without One Big Beautiful Bill, you'd lose the expanded child tax credit and see your tax bracket rise from 12% to 15%. That's about a $3,000 tax increase. With One Big Beautiful Bill, you keep the credit, you stay in the lower bracket, you could actually see more savings, especially if you're eligible for things like the new tip and overtime deduction or the enhanced standard deduction. Now let's say you own a business making $150,000 a year. That 20% QBI deduction saves you around $6,000 per year, and now it's permanent. These aren't just theoretical changes. They affect your paycheck, your refund, and your year-end tax bill. Pro tip, don't wait until 2026 to start planning. The smartest taxpayers will use the next 6 to 18 months to adjust their payroll withholding, restructure their business if needed, and reevaluate their retirement contributions and charitable giving. All based on One Big Beautiful Bill's new permanent rules. Business owners, this is your chance to dial in a powerful tax strategy using QBI, bonus depreciation, and Section 179. Families, make sure you're claiming every credit you now qualify for. And seniors, don't miss that new $6,000 deduction just for turning 65. In the next 20 videos, we'll break down each of these changes in detail, what they mean, how they work, and how to make them work for you. So hit subscribe and let's take this tax ride together. Glad you could join us. If you're ready for a smarter approach to taxes, check out Taxsmithing, our personalized tax strategy process. Reach out to us anytime.